What's going on, everybody? It's King-Wright here with Shaded Money, back with another video to help you improve your financial health.
Just a second.
Today we're going to take a short basic dive into the topic of stock investing. What are stocks and what makes the price change? Before we get started, make sure you hit that subscribe button so you can stay up to date on all new videos and we can keep the lights on here at Shaded Money. The question I get asked the most is, I want to get into investing. How do I get started? Well, let's take a quick look into some basic information about stocks and some things you should consider in the beginning. First things first, what is a stock? A stock represents a piece of ownership of a company. When companies become big enough, they decide to take their company public, which means buying ownership in that company's stock is open to the general public. When these companies are first put on the stock market, that is called an initial public offering, or IPO. Companies like Apple, Coca-Cola, Walmart, Amazon are all publicly traded companies that allow the general public to buy and sell shares of their stock through stock exchanges. The stock market is generally an electronic marketplace or exchange that connects people buying and selling stocks. So when someone is selling their stock, they are just exchanging money with someone that just clicked buy on that stock. When a company is first put on the stock market or has its IPO, the initial price for that stock is set based on the estimated valuation of the company and the amount of shares they are making available to the market. Once that initial retail price is offered to the public, the price of the stock from there on out is determined by a few things like supply and demand and the marketplace's confidence in the company. For example, Amazon's IPO price was just $18 for one share in 1997. Today, that same one share is worth about $3,300. People can lose or gain confidence in stocks for many different reasons, and that too can drive the price. High or low earnings, company news, whether good or bad, new product launches, lawsuits, scandals, epidemics and pandemics, pop culture mentions or viral moments, and so much more to name. A few years ago, Wells Fargo Bank was hit with numerous lawsuits in regards to its sale practices. Lack of investor confidence and people selling off their shares helped contribute to the stock decreasing by 67% over time, going from an all-time high price of $65 per share back in 2018 to a low of about $21 in 2020. Supply and demand also takes a role. If the demand for a company's stock is high, meaning a lot of people are buying that stock for whatever reason, the price will increase because the supply or number of shares available to buy will be decreased. If something happens that causes investors to lose confidence in the company, they will sell their shares of stock, making the price go down because there will be more shares available or an increased supply in the market. For example, let's compare this to the shoe market. Exclusive shoes like Jordans and Yeezys are produced and released in limited quantities, so securing a pair at regular retail price can be difficult sometimes because of the shoe resale market. If there are only 1,000 pair produced in the world and released at that retail price of $200, once those highly demanded shoes are sold out and those bought pairs start to enter the shoe resale market, the price you will have to pay for those pairs from someone that is reselling them will be higher than that initial retail price because the demand is still high and the supply or number of pairs produced didn't change. The price is driven by what people are willing to buy, hold, and sell it at. And that's the same concept with stock prices. So there you have it. I just did a short basic breakdown of stocks and what causes the price to change. I hope you got something out of this video, and stay tuned for the next video. I will cover how you make money with stocks and some steps you should consider before making your first investment. Remember to continue to research these topics on your own to maximize your own knowledge on these topics. If you're interested in receiving a free stock, there's a link in the description where you can get a free stock from the Robinhood app. If you want to keep the lights on here at Shaded Money, please hit that like button and subscribe to the Shaded Money channel for more videos to help you improve your financial health. I'm King-Wright, and I'm signing out.